Absolutely. So right there. Okay. 3, 2, 1. Hi, everybody, and welcome to Talking with Janice with me, your host, Janice McLean DeLoatch. And today I have the pleasure of being joined by Stephen J. Schless with the Stephen J. Schless Group of PRMI. And he is the division president. So I want to welcome my guest, Stephen J. Schless.
Great to be with you. How are you?
I am wonderful. I think when we look at the grand scale of all the things that are going on in the world today, I am absolutely wonderful. So thank you for asking.
Fantastic.
So you have nearly 20 years of mortgage industry experience, including 13 years devoted to reverse mortgages. You are one of only a few mortgage professionals who have earned the CLTC, Certified Long-Term Care designation, demonstrating that you've acquired critical tools necessary to discuss the subject of longevity and its acute consequences on a client's family, financially, physically, and emotionally. Wow. That's like you have a crystal ball years down the road. Prior to joining Primary Residential Mortgage, PRMI in 2019, you served as the top producing loan originator for Maverick Funding Corp. And the branch director for Home Point Financial, the national reverse mortgage director for the U.S. Mortgage Corp. By 2021, PRMI's reverse mortgage volume had risen 400%, prompting Stephen's promotion to reverse mortgage division president, where you will take the strengths that you have brought to the group and extend them company-wide. Okay, tell me what NRMLA stands for, if you wouldn't mind.
NRMLA, and it's the National Reverse Mortgage Lender Association, of which we are a part of.
All right. Committed to giving back, Stephen serves on the board of the Pikesville Owings Mills Regional Chamber of Commerce and chairs its marketing and young professional committees. Love it. You you've been a part of the Alzheimer's Association Greater Maryland chapter, and you love spending time with your wife and 2 young daughters. Do you really? There's that disclaimer. You have to put that in there as a guy, right?
I love spending time with them. It's right now. My little one, she's 2.5, and her new thing, she's discovered that she can escape her crib in the middle of the night. So
oh, no.
3, 4, 5 o'clock in the morning, she's walking the floors, and she's just excited to be able to be free and be out. And we're like, can you go back to sleep? It's 3 o'clock in the morning. So most of the time, yes, I love spending time with my family. Not necessarily 3 o'clock in the morning.
Right. Okay. All right. Well, so there's some story about who you are and some background and history. And thank you for being with me today on Talking with Janice.
Absolutely.
Let's start by talking about what the good things are and the bad things are about reverse mortgage loans.
Sure. Yeah. I mean, reverse mortgage loans are a concept that's been around since the 1980s, which have really, the product has really taken off over the past 5 or 6 years. It is an incredible way for homeowners age 60 plus to leverage what is in most cases their largest asset, and that's their home. Right. I mean, think about the way, Janice, that most people have planned for retirement over their life. They've worked hard, they've saved, they've invested into 401ks, IRAs. Maybe they have some other investments. But what they've also done, without really even realizing it, is they've created another source of wealth, and that's their home equity. From all of these years of paying a mortgage payment and paying into the home, they've created this huge asset, which is their home equity. And in most cases, that does represent their largest asset. And so a reverse mortgage is a financial tool that enables them to leverage that asset, turning it into tax-free funds that can be used to supplement one's retirement income.
Okay, what are some of the myths that people have about reverse mortgages?
I think the biggest one is that somehow you give up ownership of your house, and that's absolutely not the case. A reverse mortgage is just that. It's a mortgage, no different than a traditional mortgage, which most people that have owned a home have had a traditional mortgage. There's a lien against the house. That lien is a reverse mortgage lien. It must be paid off when the loan becomes due and payable. With the reverse mortgage, that happens when the last remaining homeowner leaves the home. But you still own the home. You can also still pass the home on to future generations. A lot of people say, well, Steve, I don't want to take a reverse mortgage because I want to be able to leave my kids the house. That's their inheritance. You can still do so. And in most cases, you actually, if you structure the reverse mortgage properly, and that's key, and we can touch on that more, you can actually wind up leaving your kids and your heirs more of an inheritance because you took the reverse mortgage.
Oh, wow. Yeah, I would really, can you, we don't have a lot of time in this show to expand on that, because I have heard from some seniors there were all kinds of issues when they took a reverse mortgage, and then later on some of them were forced out of the house, and the stories that I heard were not ones where people were benefiting from them. They really were horror stories. So maybe the next time you and I get together, we can talk a little bit more, or you have some examples about what people could have done or could do to fix that.
Yeah, and I think we can touch on that briefly because that's an important topic to bring up. So it's important, number one, to understand everything that you're getting into, of course, with any financial product. And
Right.
education is paramount. I would advise you need to speak with a reverse mortgage professional, somebody who specializes in reverse mortgages. Just because I have a mortgage license, that license allows me to do both traditional mortgages and reverse mortgage. I've chosen to go the route of reverse mortgages, and we do that exclusively. Not everybody does. Not everybody has the knowledge and the information that we have on reverse mortgages. But let's speak for a moment about some of these horror stories, because that is what most people think of first when they hear the term reverse mortgage. Oh, I would never do that. I've heard people lose their house, or you can get foreclosed on. When reverse mortgages came out in the 1980s, they were designed by the federal government as a financial tool to enable homeowners to age in place, right? To not have to go into a senior living facility or a nursing home. What wound up happening for probably 30 years thereafter is that they were used inappropriately. They were used as a loan of last resort. Reverse mortgages are not meant to be a band-aid on an open wound, right? They're meant to be a piece of the retirement planning puzzle. But for 30 years, people used them as a loan of last resort. If they were broke, if they were destitute, they had already used all of their other retirement funds, then they turned to a reverse mortgage. But at that point, it's just too late. And so what happened was you had a lot of folks that took out reverse mortgages. They got whatever cash they could out of the home, but it wasn't enough at that point. It was too little too late. They probably would have been better off selling the house, taking the rest of the equity, and either downsizing or renting a much smaller apartment or something like that for the rest of their lives. So they would take out this money, the money would be gone, and then they would default on the taxes and the homeowner's insurance, triggering the loan to be foreclosed on. Well, Janice, you know as well as anybody, right? If you don't pay your taxes and your insurance, Uncle Sam's going to take your house. And unfortunately, very unfortunately, because you had a lot of good people that lost their home, it wasn't the reverse mortgage that caused it. It was the way that the reverse mortgage was structured within the retirement plan. We turn away, Janice, probably about 20% of the clients that come our way that ask us for a reverse mortgage. We turn them away because it is too little too late. They're not, at that point, we wouldn't be doing them a service. We'd actually be doing them a huge disservice by giving them a bunch of money from a reverse mortgage where they need much more than that. And so it's important to point out that the reverse mortgage is made a part of the overall retirement income strategy, not used as a loan of last resort. And since the thinking about that has changed over the past 5 years, there's been a huge drop off in the rate of foreclosures. Foreclosures on reverse mortgages are almost non-existent these days because there's been more forward thinking about these concepts.
Wow. Okay. All right. So tell me some strategies that people can use to build wealth in retirement by using their house.
Yeah, so the home is what's considered a low growth potential asset, right? If you think of your other investments, particularly over the past 8 to 10 years, and what the stock market has done, what your 401k has done, your 401k, anything that you have invested has grown at a much higher rate than your home has. And so the concept of reverse mortgage and using the housing wealth first, instead of using your other assets first, enables your overall retirement nest egg to grow larger, right? Because think about it, Janice, the more you leave in your other retirement accounts, the more interest can build and compound on that money that's in those accounts. So if you use the home equity strategically at the most opportune times during your retirement, it could protect and prolong your other assets, causing you to actually wind up leaving more money to your heirs when you pass away and enabling you to live a more comfortable retirement lifestyle.
Okay. How do you leverage wealth during economic uncertainty, like today?
Yeah.
How do you do that?
Yeah, we've had a surge of business over the past year since COVID hit, because I think what happened is it caused people to plan better. COVID has taught us all a lesson in that we were underprepared as a country
Yes, this is
for
true.
a global pandemic, and it's important to be prepared. The concept of leveraging housing wealth. I mean, leverage is how the largest corporations in America got their start, right? It's the concept of using borrowed capital to make your overall pool of money last longer and to increase that overall pool of money. And that goes back to what I spoke about just a few moments ago, in that when you use housing wealth and you bring it to the table, you're bringing now to the table all of your assets instead of just tapping into your 401k, your IRA, stocks, bonds, mutual funds, that sort of thing. When you use your entire pool of assets, you're able to pull levers at the most opportune times to extend the life of your overall nest egg. And leverage is it's a simple concept. Using borrowed money, which is what you're doing with a reverse mortgage. You're borrowing from your home equity and you're using that for the purpose of extending your overall portfolio.
That is really a great point that you make. And this information you're sharing is wonderful. It's really a great wealth of information that you're sharing. And I really do appreciate that. Sometimes well, you don't know, but I will tell you, I am a little disheartened because there are a number of people who don't have houses to build upon. And for that market who are disenfranchised, this information is wonderful. but you have to have the base, which people today are still struggling just to even get the base. So, yeah.
Well,
you know,
to your point about there are a lot of people struggling right now, and
yeah.
what we've seen the most of over the past year is not necessarily getting a bunch of cash from the reverse mortgage or setting up a line of credit, or not even folks aren't really concerned how much money can I take out. It's, look, Steve, I have a mortgage payment of $1,000 a month or $1,500 a month, and if I
Right.
could just be freed up of making that monthly mortgage payment, boy, my life would be a whole lot easier, particularly during these times of economic uncertainty. And a
Right.
reverse mortgage can do just that. It can pay off and replace a traditional mortgage loan, thereby eliminating the mandatory mortgage payment that you have on that traditional mortgage. Reverse mortgages have flexible payment options. You can choose to make a payment, or you can choose to defer paying back the loan until you leave the home. So a lot of people are coming to us right now for that economic relief, to just eliminate the mortgage payment, free up cash flow, and enable them to continue to live a lifestyle that they want to live.
Okay. Now, is there an age requirement for reverse mortgages?
Yeah. So the age for there's two different kinds of reverse mortgages. There's the government insured reverse mortgage that represents about 90% of all the reverse mortgages done today. The age requirement is 62 years of age for that program.
Okay.
There's also jumbo reverse mortgages for homes in excess of $800,000. We don't do a lot of those. There's not a lot of those that are being done across the country, but those products do exist for the higher net worth families and individuals. The age requirement for that product is 60 years old.
Okay. Are there any programs available like a reverse mortgage or a reverse mortgage for people who are under 60 years old?
So
That you
the
may-
housing wealth excess market has grown over the past, I'd say, decade. There are programs that will, there's companies that will come in and buy your house and rent it back to you. That's apples and oranges from reverse mortgages. It may
Okay.
give you some economic relief. It may enable you to cash out of your house and still live there. But reverse mortgages do it differently. You still own your home.
All right.
You're just borrowing money. There's a mortgage lien on that loan on the house. You have the option, though, to pay it back either by month or deferring payback until you leave the house. So there are some other options, but there's not the option to access your home equity, not have to pay a monthly mortgage payment, and still own your home, other than the reverse mortgage.
Okay. Purchasing a new home versus a reverse mortgage.
Well, you can actually purchase a new home if you're 62 or older. You can buy your next house with a reverse mortgage.
Wow.
Most people don't realize that.
Yeah, that's the first time I've ever heard that. Okay.
Yeah, it's very popular right now, and I'll give you a good example. So we had a client in White Marsh, Maryland, a couple months back, and they came to us. They had a home that was just too much home. It was 3 floors, lots of stairs. They needed to get out of there. It just wasn't a home that was going to serve them well as they grew older. They were in their young 60s and realized they needed to make a move. The value of that house was $400,000. Okay. And they owed $100,000. So they sold the house. Their cash after the sale was $300,000. Their plan was to take that $300,000 and just buy their next home for cash. A smaller home. They wanted to downsize. They wanted everything to be on one floor. But by using all of that cash, it would have depleted all of that cash flow, right? I mean, taking all of that $300,000 and putting it into the new home. Instead, they purchased the new home with a reverse mortgage. The reverse mortgage allowed them to put down only half of that money, buying the house with a reverse mortgage. And moving forward, they have no mandatory monthly payment requirement.
Wow.
The reverse mortgage covers the other half, and they're deferring paying back that $150,000 until they leave the home. What that did for their cash flow and for their retirement nest egg was huge. They took that extra $150,000 and they added it to their overall pool of money that's going to help them live a comfortable retirement. That's a great way to buy a house if you're over 62
Yeah.
an incredible way to buy a house in retirement.
Stephen, you're going to write a book, and you're going to give me credit in your book that we were hashing these ideas out and we got to share these. And I don't know why you're just going to put me in your book. I'm just asking. Yeah. But this is amazing information.
Thank
This
you.
is just really amazing information.
It's very different than what most people think they know about reverse mortgages. I think when people hear reverse mortgage, it's that stigma that they're either too good to be true, or the government's going to take your house, or you're going to lose ownership, or they're expensive. That's one I hear all the time. The interest is too high. We closed a loan today with a 3% interest rate. Right? I mean,
Wow.
interest rates are not any higher than traditional mortgage loans. So there's all this stigma and all these myths and misconceptions about reverse mortgage. And I think the best advice that I can give any one of your viewers and listeners is just become empowered, right? Become empowered with education, speak to a professional, whether that's myself or another reverse mortgage professional. But if this is something you're interested in, don't listen to your neighbors, sisters, brothers, uncles, cousin who thinks they know everything there is to know about reverse mortgages, because they don't, right? Talk to somebody that actually knows and can help you and can guide you in the right direction.
All right. And just we have some more questions that we're going to get through, but what is your contact information?
Yeah, so our website is theschlessgroup.com, theschless, SLESS group.com, or you can just pick up the phone and give us a call, 410-814-7575.
Okay. So what are some advantages in terms what are some advantages for reverse mortgages for seniors who are veterans and versus other loans? So did you get that? Or you need me to do it again?
No, I'm good. So veterans, we love working with veterans. Love working with veterans. So veterans, most of the time when they want to take out a mortgage, they turn to VA loans, and VA offers they offer incredible mortgage options. But the problem with VA loans, and this is the same issue with any traditional mortgage loan, which is going to carry, a 15, a 20, or a 30-year term, there's a mortgage payment that you have to make every month. With a reverse mortgage, you have the flexibility of making that mortgage payment, but it's not a mandatory requirement of the loan. You can defer those payments until you leave the home. And so a VA loan is a good option. You're going to be able to borrow more money with a VA loan, but you're going to have a payment that comes along with that money. And so, my best recommendation is compare apples to apples, right? Look at what a VA loan looks like compared to a reverse mortgage, weigh your options, and then make the best decision for you and your family and your financial future.
Okay. Tackling education debt with a reverse mortgage.
Yeah, we still talk to folks that are 62 and older that still are paying off student loans from 40 years ago. It's pretty crazy, actually. We had a client the other day, we were going through her credit report and everything, and beautiful credit report, but she's like, Steve, I've had these student loans on my credit for 33 years. 33 years. I mean, I was blown away. And she's like, yeah, I've never been able to pay it off. And we were able to pay off her student loans that she's been paying on for 33 years with a reverse mortgage. She no longer has to pay those loans. They're completely paid off. And we were able to supplement her retirement cash flow by being able to send her a check each and every month.
Would you give me an example, just briefly, a scenario that somebody could use to pay off the student loans?
Well, so how else would they pay off their student loans, other than making payments and sometimes taking 33 years to pay them off? So this person had enough equity in their home. I believe her home was about $200,000. She didn't have a mortgage on the house. Okay. She wanted some monthly cash flow, and she wanted to eliminate the student debt. So we were able to lend her upwards of over $100,000. And we used a portion of that to pay off the student debt, and we're able to send her a monthly check.
Wow. Okay. Yeah. All right.
A
Great
lot to
divorce.
unpack in a half an hour.
Man, I'm sitting here going, I need to, let me see, what do I have? What can I, yeah. So anyway, great divorce, dividing assets with a reverse mortgage.
Yeah, we're using reverse mortgage as a strategy to help divorcees that are over 62 divide assets fairly so that one of them isn't left with the short end of the stick. Senior divorce is on the rise. There's a real uptick in senior divorce. There's been an even larger increase over the past 12 months. I don't know what that tells you, Janice. I mean, seniors have been stuck in the house with each other for a year, and there's a lot of divorces happening. So uh,
Yeah.
it's difficult when you can't get out and you're with each other 24 hours a day. But there's a lot of older homeowners that are getting divorced, and
Wow.
particularly if one wants to remain in the marital home, using a reverse mortgage to cash out the other spouse and allowing the spouse that wants to remain in the home to age there comfortably in place. It's a great way to divide assets. Instead of selling the house and then both have to go buy a new house.
Wow. I don't know. That kind of bothers me when I hear people over 62 getting divorced. I want them to stay together forever. And, so I don't know, maybe I think the pandemic is really, really, really showing up in a lot of
Oh,
areas right now.
it is. It is. I
Yeah.
think there's a stress level. There's an economic stress that comes from it, and there's also the stress of people have been kind of stuck with each other indoors for so long. We're coming out of the winter. I mean, now that it's springtime and the weather's turning nice, I think everybody's attitude is going to be more upbeat, and it looks like we're making headway to get through this pandemic, but there are there's a lot of divorce in America, but particularly in that senior demographic. And we never like to see it, but we're glad that we can provide a solution to help.
Yeah. Long-term care and extended care planning.
Yep. Using reverse mortgages to either fund your care needs, just using the cash from the home to pay directly for care needs, or funding a long-term care insurance policy and allowing the home equity that you build up to pay for one of those policies. Again, it's all about lifestyle. It's all about the ability to age comfortably in place. Some of these long-term care insurance policies are incredible, just from a peace of mind standpoint, to be able to know that you're going to be able to receive the quality of care that you need. And look, I mean, my parents are, of the generation to receive a reverse mortgage. They just took out a reverse mortgage in August, and we use some of the proceeds to fund one of these long-term care insurance policies because I want the peace of mind to know that my parents are going to get the quality of care that they deserve. Right. I mean, I of course would care for them, but I'm not able, right? I don't have the time. I'd find the time if I needed to, but to know that there's going to be care in place if and when they need it is priceless. And they're using the reverse mortgage to fund that long-term care insurance policy. So
Now,
it's a great way to ensure peace of mind. And it's a great way not to just ensure peace of mind for you, the reverse mortgage borrower, but for your kids as well.
yeah, I think, again, to me, the pandemic has caused a lot of people to rethink long-term care and extended care from a financial perspective, but also when you look at all of the people who were in nursing homes and
Yeah.
they couldn't leave and people couldn't come see them. And, so we could go a whole nother hour with that topic on itself,
Yeah.
but we won't. Now, do you guys offer this through your company, the long-term care policies?
So I'm certified in long-term care. I have the CLTC designation, but I don't
Okay.
have the insurance license. We have an extensive network of long-term care professionals, financial planning professionals, estate and elder law professionals, and insurance professionals on a referral basis. So if somebody reaches out to us, whether it's for a reverse mortgage or for one of those other products, we have a direct referral path for them. And these are all people that we know, like, trust, and are vetted by us,
Okay.
and they give our clients fantastic service.
Okay. All right. Using technology to improve communication.
Yeah, it's been a Zoom kind of year, right? You and I are doing it. You and I are doing it right now,
Yeah.
and we're doing it with our senior clientele. I had a Zoom meeting this afternoon with a woman that was 87 years old. She never thought that she could use Zoom. It's the way that she's been communicating though with her grandkids over the past year.
Mm.
Facebook Messenger, FaceTime, Zoom, GoToMeeting, all these different technology platforms have really enabled us to communicate better. And it's how, in large part, we're able to communicate effectively with our clients all across the country.
Mm-hmm. So is home equity an underutilized asset?
I think it is. I
Okay.
think most people don't realize that it's an asset class. Most people think, and this is just the old American dream is you buy a home, you pay off your home, you leave your home to your kids.
Right.
Your kids move their family in the home, and that family is passed on from generation to generation. And
Mm-hmm.
that's just not representative of what reality looks like today, right? The home is an asset, and retirement, Janice, isn't what it used to be. Right? It used to be you worked for a company for 30 years, for 40 years, you retired, they threw you a party and they gave you a gold watch and a pension. And that was your retirement. That pension was your retirement. Well, most organizations don't offer pensions anymore. So unless you work for the federal government or a Fortune 500 company,
Yeah.
you need to get creative and you need to get very dialed in and strategic in how you fund a comfortable retirement using home equity. And again, which is in most cases your largest asset,
Mm-hmm.
has to be a part of the overall retirement strategy in order to have a well-rounded, comprehensive financial plan.
Okay. And then let me ask you, do you offer specific packages and or what would the cost be? Is there a consultation fee? Once you help people, what kind of percentages do you take or, all of that? Because that's really important for people
Sure.
that sometimes will help people decide whether they want to move forward or not.
Yeah, there's
Yeah.
no, education is free, right? So we're happy to empower you, educate you, and just give you the tools necessary for you to make the best decision for you and your
Right.
family. There's no cost to that. Um, it's a mortgage, right? So mortgages have costs. There's title fees, there's recordation fees, there's county, municipality fees. So of course, like any mortgage, there's fees. There's also an interest rate. Reverse mortgage interest rates right now are very low. They're in the threes. As far as our firm and our compensation, we can charge. We're a hybrid between a broker and a lender, so we can do both. We choose what route is going to be best based on what's best for the client. And we charge an origination fee to do so. The origination fee is typically anywhere between $2,000 to $6,000, depending on the value of the house.
Okay. And does that come out of the loan?
Yeah, it comes out of the loan. We can do a loan without any money paid out of pocket. We can
Okay.
incorporate all of the closing cost of a loan into the loan, and those can be financed. There's no out of pocket expense.
Okay. Any new initiatives that you want to share in your industry with regard to reverse mortgage? And then what's up next? What should we be looking for next?
Yeah, so we have I think it's a really good video series. It's on our YouTube page. If you search the Stephen J. Schless Group, it's the Stephen J. Schless Group on YouTube. We put out a lot of content on YouTube, and we have an educational series. It's called Retirement on Your Terms, Straight Talk, Real Solutions. And every Monday for the next, we've released, I believe, 10 videos, and we have another 10 to go in the series. We touch on a specific way that you can use a reverse mortgage to live a more comfortable retirement. We talk about buying a house with a reverse mortgage. We talk about funding long-term care, all these different ways that you can use a reverse mortgage. Those videos are on our YouTube page, so I would encourage anybody to check those out. Again, that's the Stephen J. Schless Group on YouTube. And while you're there, subscribe so that you can get notified whenever we put out new content, because we're always creating content. We're always looking for ways to educate.
Well, this is really important to me as far as education. I think people really need to understand what's available, what's out, whether you are getting a reverse mortgage or not. It's just nice to know, like you said, knowledge is power. You didn't say it like that, but it meant the same thing. And I think the more people educate themselves about what is available, it does help you plan moving forward. And I think what I've noticed, and even just about myself in the last year, that when you fail to plan, you plan to fail. And I used to
Absolutely.
hear that saying all the time, and I thought, what are they talking about? But it's really true, because even myself this year, I've become a little more conscious about planning things and following through, and then understanding that I've wasted a lot of time and money in some cases because I just didn't take an extra 15 minutes or 20 minutes to read something or pick up the phone and make that call just to find out if whatever it was of any benefit to me at all. And so that's an education in itself. I just want to thank you. This information you've shared has just been absolutely eye-opening. Definitely has my mind thinking about a lot of the things that you said. And then I'm thinking about people that I know that I can share this information with who could benefit from it. So
Yeah, I appreciate the opportunity, Janice. I mean, this has been tremendous, and we unpacked a lot in 30 minutes or so, and I can't
yeah,
wait to the next time because there's a
yeah,
lot more to discuss. And
okay.
you made a great point that if about planning, I think most people hesitate to reach out to learn because they're afraid they're going to be sold something, right? And so they just don't reach out. And I think you can feel good about reaching out, particularly to us, without the call, without the concern and the worry, oh, they're just going to try to sell me something. We're
Yeah.
going to take the time. We're going to evaluate your situation. We're going to advise on what we feel is the best solution, but ultimately it's up to you, and it's up to you not just to learn about reverse mortgages, but everything else that comes with making a well-rounded financial plan. So this was great. I really appreciate it, and I can't wait to be on again.
Thank you. And I certainly look forward to having you back. We're going to continue to have these conversations either on Zoom or on the air. But it is always my pleasure to talk with you. And you just always share such a wealth of information. And I appreciate you. One more time, how do people follow up with you and contact your group?
Sure. So online, www.theschlessgroup.com, or give us a call, 410-814-7575, and visit our YouTube page, the StephenJSchlessGroup.com. Subscribe so you can get all of our videos. So you can get notified every time we drop a new video.
Wow. All right, my pleasure. Guys, that has been Talking with Janice today and my guest, Stephen J. Schless. So stay tuned for the next wonderful guest that we bring you. And again, always amazing information. Thank you for watching Talking with Janice.